Good evening, everyone, and welcome to our live video broadcast by Affin Hwang Asset Management. I'm Roy Yap from Affin Hwang Asset Management, and I will be your host for today. The small cap investment space has been one of the biggest winners year to date as prospects of an economy recovery becomes clearer. Today, I have our business partner, Ben Sheehan, a senior investment specialist from Aberdeen Standard Investments, who will be discussing about opportunities in global small cap and how we can spot big winners in this universe through the Affin Hwang World Series Global Quantum Fund. Without further ado, Ben, let me ask you our first questions. Why should we invest into this strategy of global small cap and why now?
Thanks, Roy. Well, small caps offers a huge and untapped universe of about 6,000 companies. And it is a segment of the market where you will likely find tomorrow's future leaders today. So by just focusing on large caps, you're ignoring about 2/3 of the stock universe. In addition, small caps are very inefficient and a very under-researched segment of the market, which makes our job of finding great companies ahead of the pack much easier. There's data going back about 90 years that shows small caps have outperformed large caps by a big margin. However, there is now a generational opportunity to invest in small caps relatively cheaply. So this is not only a great asset class, it's also a good time to get set.
Okay, so with that, what has done well or not so well for the strategy year to date and over the past quarter?
The Global Quantum Fund has been performing well during the recovery phase since the market hit rock bottom on March 23rd, 2020. Since then, the fund is up almost 80% and has outperformed the MSCI All Countries World Small Cap by about 5% and is about 20% higher than the MSCI All Countries World, which is a larger cap benchmark. We put this strong performance down to our ability and our focus on quality of the companies that we invest in. For example, quality to us means strong balance sheets, clear competitive advantages, high margins, and strength of management. Importantly, we choose companies operating in growth industries. Now, as the market has a laser focus on fundamentals right now, this has been a very good environment for our approach.
Okay, so for the third question that I have for you is, what has been the changes to the portfolio positioning and the key portfolio actions?
As many investors in this fund will know, we have a bias to innovative companies. Our sector exposures shown here indicate our heavier weights in technology, healthcare, industrials, consumer sectors, and we tend to hold less in low growth telecom utilities, and we also hold less in the more volatile energy and material sectors. So these sector preferences have continued to serve us well in 2020. In terms of recent activity, we've added to our consumer-related exposures, including a UK homewares retailer and a supermarket operator in Finland. Given global spending habits have recently shifted away from services, including spending on travel and experiences, towards goods such as foods or home upgrades, these are the types of additions that will help to ensure the earnings certainty of the portfolio will continue. We've also added a Korean company that specializes in cloud-based accounting software. And given that Korea has emerged from COVID-19 so far in relatively good shape versus the rest of the world, we expect the IT services spend there to remain fairly robust. Now to fund these two purchases, we've exited actually a travel-related name, which will clearly face some headwinds.
Okay. With that, what are some of the investment opportunity you can find in this current market environment?
So through our bottom-up research process, we've uncovered various structural growth opportunities. These include plays as diverse as 5G, diabetes treatment, content moderation, green energy, cashless payments, and even home care and home health care, that is. So many of these many of these opportunities are actually unique to the small cap space and are difficult to find in large caps. Now, there are big structural shifts in spending at the moment caused by COVID-19. We have demographic changes like aging. We have growing health issues like obesity. We're moving towards a cashless society, and global policymakers are committing to a greener and more lower carbon world. And this fund is giving you exposure to these big multi-year structural trends.
Okay, the next questions. What headwinds do you foresee moving forwards?
So volatility will remain a feature of the equity market, as it always will. And there are various potential triggers for high volatility. These include further waves of COVID-19 and related risks to global growth, continuing frostiness between the US and China, or even no agreement over Brexit. On the optimistic side, and offsetting this, is an abundance of policy support, both monetary and fiscal, promising data on COVID-19 vaccines that have come out last month, and that business and economies are now adapting better to COVID-19 in terms of their business models. Closer to home, we've also seen the RCEP multilateral trade agreements being sealed across with various Asia-Pacific nations including China. And otherwise, there appears to be an emerging bullish consensus that in 2021 will be a recovery year for economies and markets. And we all really want to leave 2020 and not look back. Now, with regards to volatility, we will use it as an opportunity to exploit mispricing opportunities.
As we conclude our quick section today, what would be your words of advice to investors when investing into this fund?
So now, despite the recent strong performance of small caps, they do remain much cheaper than large caps. In fact, they're cheaper now on a relative basis than any time in the last 17 years. This discount is shown here and is based on what is known as the Shiller price to earnings index. Now, essentially, this represents a good entry point to get set for the long term, a generational opportunity. On top of that, by partnering with us, you're investing in a manager that knows this space very well and has generated top decile performance with a consistent process. We are an old hand at this, and we've gone through many economic cycles. The opportunity is now, where you can identify tomorrow's winners today.
Thank you very much, Ben, and it was a pleasure to have you with us.